Welcome to the Weekly Dose. Today we're diving into a fascinating story about two kinds of titans. We've got a new one, so big it's literally trying to rewrite the market rules, and an old one, adapting at incredible speed to a brand new world of money.
And just so you know, all the insights we're about to break down come straight from the latest Weekly News and Insights report by Augusta Global Insights. So we're getting a direct look at the big forces shaking things up.
So let's just start with this question, because it's at the heart of our first story. What actually happens when a company gets so powerful, so massive, that it stops playing the game and just starts rewriting the rulebook itself?
Okay, so here's the game plan. First, we're going to look at SpaceX and its absolutely wild IPO plan. Then, we'll pivot to see how a classic titan, Mastercard, is diving headfirst into digital money. After that, a quick fire round on other big players making waves, and finally, we'll pull it all together to figure out what it all means. Sound good? Let's do it!
All right, Section 1, SpaceX's rule-bending IPO. This is really the story of a new kind of giant flexing its muscles in a way we just haven't seen before.
To really get a sense of the power we're talking about, you just have to look at this number, $1.75 trillion. That's the potential high-end valuation for their IPO. Trillion with a T. This isn't just big, it's set to be the biggest in history, and that kind of money gives you some serious leverage.
And here's exactly how they're using that leverage. The report says SpaceX is basically going to NASDAQ and saying, hey, you want our record-breaking IPO on your exchange? Great, you're going to have to change your rules for us first.
And check this out. Here's the change they're pushing for. Right now, the rule is you have to be trading for about 3 months before you can get into a big index like the Nasdaq 100. It gives the stock time to settle. But this proposed fast entry rule would chop that down to just 15 days for a giant IPO like this.
Now, as you can imagine, this is causing some serious waves. And critics, like Michael Burry, are pretty blunt about it. He's saying, look, these rules aren't being changed for the better. They're being rewritten to help the company and its early backers. And guess who gets the risk? The everyday person, the passive retail investor.
So what does that actually mean for you? Well, if you own a popular ETF that tracks the Nasdaq 100, this new rule would force that fund to buy a boatload of SpaceX stock almost immediately. This creates this giant wave of forced buying, which can pump up the price and make things super volatile. So your supposedly safe, diversified investment suddenly takes on a massive, risky position in a brand new stock, and you had zero say in it.
Okay, let's switch gears and talk about our other titan. Section 2, Mastercard's digital money pivot. This is a totally different story, one about an established player adapting to survive and thrive.
So while SpaceX is out there trying to change the market's rules, Mastercard is busy changing its own game. They just dropped $1.8 billion to buy a company called BVNK. It's a platform for crypto and stablecoin infrastructure. A number that big tells you one thing: they are dead serious about this.
Now, to really get why this is such a huge deal, we got to quickly cover two key terms. First, you've got fiat currency. It's just the normal money we all use. Dollars, euros, yen. It's the system Mastercard has dominated for decades. And then you've got the new kid on the block, stablecoins. The easiest way to think about them is as a digital dollar. For example, one of the biggest, USDT, is designed to always be worth $1. It's basically cash, but living on the blockchain.
So here's what Mastercard is building, and it's pretty slick. Someone can pay with a stablecoin, BVNK's tech instantly converts it, and the person on the other end, the merchant, gets paid in their normal local currency, like dollars. The result? Cross-border payments that used to take days now take minutes. And it works 24/7. This could completely change how global business is done.
All right, let's move on to Section 3. And it's not just these two making huge plays. The Augusta report shows this is happening all over the place. So let's do a quick fire round on some other major movers.
You've got Toyota pumping $1 billion into its U.S. plants. That's a huge bet on American manufacturing. Then there's Berkshire Hathaway, continuing its big push into Japan with a nearly $2 billion stake in an insurance company. In the world of AI, OpenAI is offering a crazy 17.5% guaranteed return to bring in new money. And in a move nobody saw coming, Volkswagen is teaming up with a defense company to make parts for the Iron Dome. Every one of these is a massive strategic shift. Okay, let's bring it all together. Section 4, the big picture. We've seen these giants make their moves, but what does it all mean for the rest of us? So let's boil it down. Takeaway number 1. As we saw with SpaceX, these mega IPOs can change the rules and inject a whole new level of risk into what you thought were safe investments. Number 2, the old guard isn't sleeping.
Companies like Mastercard are moving aggressively to adopt crypto and stablecoin tech. Really, the big takeaway here is that the race is on, not just for cool new products, but to own the fundamental plumbing of our financial future.
And that brings us to the final and maybe most important question. In this new market of titans, where new giants are rewriting the rules and old giants are reinventing the system, who exactly is looking out for the individual investor? Something to think about.
If you want to dive deeper into any of this, we've put a link to the full Augusta Global Insights report right in the description for you. Thanks for tuning in, and make sure you subscribe so you can stay ahead of the curve with us.